Good morning and welcome to the trade setup right here on BloombergQuint Live. It's a mixed day of trade, you would have to say, because the world over, the start indicated or seems to be of a flattish nature, but we could have our own problems, and I'll tell you why in just a bit. First, let's get to the main part of the business, which is the coronavirus update, something that we do every day. And world over, some news flows. John Hopkins University, of course, has put out the data of what the numbers are looking like, and the numbers are not looking great. Global cases have totaled more than 2.7 million. And most cases reported are in countries like US, Spain, and Italy in that order. US, of course, a huge lead over some of the others, and that's not good news, but I'm just putting it out as is. By the way, for everybody, and I put this point specifically out here because everybody in India is not quite understanding this, but loose social distancing rules are pointing towards a slow recovery in Indonesia, and therefore all of us, whenever the lockdowns have opened up, or even now if you're stepping out for whatever reason, social distancing should be a very, very strict norm in order to contain the coronavirus. So that's the small update. By the way, the other thing that happened is that everybody was hoping for that magic drug from Gilead Sciences, and that didn't happen. And as a result of which, look at this chart, which quite effectively shows the point that we are trying to make. The Gilead news flow died away much before people would have hoped for, and as a result of that, S&P 500 failed to close above the trend line, and that is a bit of a momentum killer for that index. In fact, if you look at Asia or SGX, there are modest losses across that screen, and the US futures too point towards a very mild kind of a trade in today's session. So no big cues coming in from the world markets, and therefore India will have to chart its own course. And I'll tell you why that's going to be a bit of a problem. First, keep in mind the currency as well. 2 days on a trot, the Indian rupee is strengthened, and therefore that is something that you should watch out for in the session today. But 2 or 3 updates. Some positivity for IT stocks was seen in trade yesterday as well. The SEBI's relaxed the period of restriction to 6 months for raising further capital through buyback. So this was banned for 1 year. Now it's been allowed for 6 months up till December 2020. There's some uptick in the IT stocks yesterday, so do watch out for those names as well. But the problems, and there are 2. One, the TLTRO 2.0, which was expected to give in some liquidity to NBFCs, had a very, very lukewarm response in trade yesterday. I think half of that amount was raised, half was neglected. A lot of questions are being asked about why is it that banks can even think of risking their capital right now in order to provide liquidity to NBFCs. It's not the bank's job, maybe, and maybe the government of India needs to come up and do that. But I have no clear answers to this, but banks showed their hands in trade yesterday, wherein the response to the TLTRO 2.0 was very, very lukewarm. So the news flow in NBFCs anyways isn't great. And there is one more news flow in NBFCs, which I'll come to at the end of the trade setup, because it's very, very crucial. Arguably the biggest talking point since the last 12 hours and the biggest impact on the markets today. But before I get to that, some stocks that you should monitor in the session today. First, Bharti Infratel. Revenues, EBITDA, and profits missed estimates. It's reported one of its biggest fall in EBITDA since listing due to higher other expenses. And the reason for the higher other expenses is a bit worrying. Other expenses were higher as the company provided for bad debts as it failed to receive payments from existing telecom players. Now, everybody's been touting about how telecom is in a sweet spot, business is roaring, but the telecom players, because of the AGR liabilities or otherwise, are not able to pay sums of 200-250 crores to Bharti Infratel. What are we talking about? So there is a problem at hand, and Bharti Infratel, very poor numbers, could see a reaction in the session today. Maybe some positive news for Tata Motors. JLR plans to reopen some of the units, including the ones at Graz and Nitra, to gradually resume out from May 18th. This is Bloomberg News reporting this. Let's wait and watch if there is some positivity around this. Larsen & Toubro, and there is some positivity for sure. Morgan Stanley and a host of other brokerages have been bullish here. Morgan Stanley's maintained the overweight rating on Larsen & Toubro. They expect public capex to bounce back by FY22, and they believe that the near-term concerns are priced in for Larsen & Toubro. So let's wait and watch if this stock has some positive reactions today. Hathway Cable and Datacom has been on a roll for the last couple of days post the Facebook and Jio deal. The revenue numbers came out. Revenues were up 19%. Net profit was up 7.3 times at 48 crores. EBITDA did well, everything did well. So the going is good for Hathway. The numbers are supporting it. Let's wait and watch if this stock has a further reaction. Not the best of news for IOC. The crude inventory losses were massive. They said in a call, this call was as per Elara Capital. They said on this con call that crude inventory losses are massive due to a sharp correction in crude prices, which will impact near-term results. And fuel demand would be down by 40% on an average in Q1 FY21. So lower demand, inventory losses means that it will be very poor numbers for IOC for Q1. I reckon that would hold true for BP and HP too. As we're not talking about the March quarter gone by, remember, we're talking about Q1. The updates are not that pleasant. So bad news for IOC as well. Now, last but not the least, and I'll take some time here, this is a very important event that has happened. Last night, Franklin Templeton wound down 6 credit risk funds schemes effective today. Yes, 6 schemes effective today. Now, all of us have already probably heard about this. Remember the implications of this? The money, if you were an investor in any of these 6 schemes in Franklin Templeton, your money is effectively under lockdown until maturity or until Franklin is able to get some buyers. Now, funds have done this in the past. They've sold off these assets to some other players at a small discount, at a haircut, whatever you call it. And therefore, the money is not lost. It could come in earlier. At worst, it could come in at the maturity date. And the maturity dates could be very, very different. It could be 1 month, it could be 3 months, 9 months, 12 months, what have you. So there is a problem at hand for investors who've invested in these schemes in Franklin Templeton if they wanted immediate liquidity. Hopefully, the extent of the haircuts would be low. My take out here is just one. That yes, it's happened to Franklin Templeton. It did not be true for all the other mutual fund schemes, other houses as well. Everybody will not have the same kind of redemption pressures as well as asset quality. So to cut a long story short, this is bad for people who were invested in Franklin Templeton. Other schemes will not necessarily have the same issues. So don't go out and redeem money from all the schemes that you have in other mutual funds in the credit risk schemes, because everybody will not have the same kind of issues that Franklin Templeton was having. However, this has the potential to have a big impact on the credit markets as well. And do watch out. I dare say this could well impact the equity markets in the session today, could well impact NBFCs in the session today. So do watch out for those. Thanks so much for tuning into the Trade Setup today.